The market continues to build momentum going into the December 10th Fed rate cut meeting. And I just doubled down on two particular stocks that I think are going to outperform in the next 3 to 6 months. So let's go ahead and talk about that. Remember, this is not financial advice. I'm just sharing what I'm personally doing for educational purposes only. Results may vary. Now, the market is heading towards all-time highs, and the portfolio just hit brand new all-time highs. Now, if you want to see me hit my 8-figure goal in this portfolio and follow along that journey, if you aren't subscribed, be sure to be subscribed by clicking the subscribe button down below this video. Also, if you get any value out of this video, please hit the thumbs up button for me. I greatly appreciate that, and I appreciate you being here. So let's take a look at the realized gain loss, because I like to log into this just to show for transparency reasons. For the current year, we are up around 465K. Obviously, results vary year to year, month to month, but I'd like to get this to 500,000. That would be pretty nice by the end of year, but I'm not the only one doing it. As you can see here in my private mastermind, Options Trading University, we now have 659 members all sharing their inspiration here today. As you can see, we had clients closing out trades into the weekend, sharing their inspiration, and we love to see that. Now, if you do want access to my Ryan's trades and my leaps, entries, and exits, that'll be at the top of the description down below. Also, I give away free trade ideas here on my Instagram, my X account, and my free newsletter, which are all three down below. Be sure to be subscribed to all of them because they're absolutely free. Now, let's go ahead and dive into the markets, okay? Economic data just came out. PCE data came out right below expectations, which means that inflation is actually cooling down. That's exactly what the Fed wants to see in order to cut rates for this December 10th meeting. Core PCE, which includes energy and food, came right in line with estimates at 2.8%. So some things that we wanted to see. And going into next week, we have December 10th, that Fed rate meeting. That's going to be the biggest news next week that we are awaiting. But if we look at the CME FedWatch tool, which is the futures for rate cuts, we could see that 87.2% probabilities that we are getting a rate cut next week. Now, if that doesn't happen, expect the market to pull back. That is just something that I'm preparing for, but it's a very low odds that that will happen. If it does, then odds for a rate cut for January will most likely go up from 84%, probably upwards of 90%. So we just have to kind of see what happens at that event, but I'm counting on a rate cut happening. That's why I'm playing a little bit more bullish here. So if we take a look at QQQ, all right, I'm going to give you some price ranges on exactly where we may be headed in the markets. Now, I think that we are going to head up to these all-time highs. It's been pretty low volume, just continuous buying, right? And momentum building on the MACD. RSI is not even overbought yet. And that is a good indication that we could head higher, especially going into a potential rate cut, right? So if we take a look at what the market makers are expecting, I'm taking a look out, let's just take a look out 12 days, or 7 days rather, okay, 1 week. The market makers are expecting a plus or minus move of $12. So if I take a look at the chart, right, $12 from here at 625, that puts it at 637, right at previous all-time highs. Okay, and then on the downside, right, that puts us around about 613, which is, funny enough, a good support level that we have tested before. So we're going to be staying probably within this range right here. Now, if we have a surprise to the downside, like the Fed doesn't cut rates and we don't hold this 613 area, then essentially we could head back down to potentially even 600, okay, at the worst case scenario, which would be a great buying opportunity. Obviously, right here would be a great buying opportunity, number one. Number two would be the downside right here, but that is not what I'm expecting. Very slim odds, 10% odds that actually happens. Higher odds that we actually head up towards these all-time highs as momentum is building, especially in the stocks that I'm about to talk about, okay? So if we take a look at the VIX levels, fear is subsiding as I predicted in the past couple videos. If we head below 15, today or even on Monday, very good odds that we head higher. But I am shoring up cash into this situation because if we follow the VIX cash allocation levels, we are currently trading between VIX 15 and 20, but on the lower end, right? So there's still slight fear in the market and we're about to flip greedy. And when people are greedy, that's when we should be fearful, right? So right now, I'm a little bit more on the aggressive side. I'm not currently following my VIX cash allocation principles, 20 to 25%. I'm actually 18%. But I could take off positions right now and free up cash at any moment. So I'm not too worried about it going into the Fed decision. Most likely, maybe I'll take off a position or two just to be more in line with these levels at 20%. But again, fear is subsiding, greed is setting in, and QQQ looks like it wants to head towards all-time high. So let's talk about the two stocks that I'm doubling down on right now. I officially doubled down on both. The first one is SoFi. So SoFi is a great company because not only is the share price a little bit lower, so a lot more investors can participate, especially when doing the wheel strategy like me, selling cash secured puts, but it's a great company with strong fundamentals, okay? So SoFi, basically, they issued $1.5 billion worth of shares. Now, this sent the stock price down pretty significantly. In fact, it's down about 6% today. Now, I'm not worried about this because they're doing this at an opportune moment in time. And I want to talk about why this is happening and why exactly I'm extra bullish on the stock now that they did this, this share offering, okay? So basically, when they offered these shares at $1.5 billion worth, right? It was underwritten by Goldman Sachs, Citibank, Deutsche Bank. This strengthens their balance sheet. So free cash goes into equity, boosting their tier one capital status, making the company financially stronger, okay? They're able to originate more loans. They're able to loan out more money because when these banks loan out money, they have to have cash reserves by law in order to do these loans. So having more cash reserves allows them to originate more loans in a lowering interest rate environment, okay, which drives revenue growth and fee income. Extra cash supports new products like SoFi Crypto, which they are launching in January of next year, okay, and they're going to also be launching their own stable coin as well that is backed by cash reserves, right? This is a traditional bank, online bank, so they're gonna have all the backings, right, for this stable coin. So stronger capital also helps SoFi stay resilient as the Fed cuts rates and margins tighten, and raising money now improves investor confidence and positions them for a better potential S&P 500 inclusion, okay? So now I think the odds of them getting included into the S&P 500 this time around, which I believe is after the close, is very slim. I think that they're probably not going to be added in this time around. Potentially it will be, maybe a 10% chance, but I think they will be added into the S&P 500 sometime early next year, okay? So this event right here, strengthening their balance sheet, really positions themselves well for being included into the S&P 500. All right. So also, as the Fed funds rate are currently between 375 basis points and 400. We're currently right here at the top where this is really a sweet spot for banks to maximize profitability, but also have enough loan origination, right? They're being like, people are actually taking out loans now because rates are reasonable, right? But the rates are high enough to where margins are still very big for the bank. So a Fed funds rate between 2 and 4% is kind of the sweet spot. So we're kind of like, if we look at the CME FedWatch tool, we're kind of at the top of that sweet spot. So we have a good year and a half, maybe even 2 years for SoFi to really milk these margins, right? Loan originations, refinancing, student loans, refinancing, home loans, all of the above. This positions SoFi very strongly. So I'm really liking that. Also, another thing is that the government may be selling off some of their student loan debt, $1.6 trillion worth. Anthony Noto already said that we are totally fine to step in and fill that need, right? Taking on those loans. And because not only are they able to acquire more customers, right? But they're able to then send those customers to other products that they have, like their banking products, their crypto products, right? Refinancing, loans, all of the above. So this is a major catalyst for a very strong company that has been following the rule of 40, meaning their net profit margins and their net revenue growth have been over 40% year over year, quarter over quarter, okay? So this is exactly what we wanna see on a company like this. So if we take a look at the chart here, okay, this is the type of chart that I like to trade the wheel strategy on, meaning cash secured puts, getting assigned shares, and then selling covered calls, getting the shares called away, and just doing it all over again. We wanna see an upward trending chart for the past year and a half, and SoFi has done a very good job at doing that. It's been trading sideways for several months now, and this is actually very good as well because the premiums are so good in the put option. So with the stock being down today, I did a specific move in the portfolio. Now, remember, this is not financial advice. I'm just sharing what I'm personally doing for educational purposes. Only results may vary. But if we take a look at the account, okay, my SoFi position is now the #1 position in the portfolio, 226,000 in cash secured puts. This is a 15% position in the portfolio to collect about almost $9,000 in premium for December, okay? So what I did today was I actually went out to January 2nd in anticipation of potentially closing these out early if the stock really rallies into the 30s. But I went out and I sold the at the money put option. Now, this is something I don't typically do, but I'm very bullish on SoFi. So the $27 put right now, strike price, I would be able to, if I sold it right now, I'd be able to collect about $1.40, so $140, which is a 5.49% potential return, okay? Obviously, results vary based off where the stock's at because it's fluctuating right now, but that's exactly what I did. I sold 8 January 2nd, 27 puts to collect about $1,176 in premium, okay? If I wanted to play a little safer, like more normally, I would just go to the 25 strike, pick up $70, which is still a 2.8% return, which is very, very good in 28 days. Now, obviously, results vary based off where the stock's at, but I like the stock anywhere between 25 and 27, and my whole position is at the 27 strike because I'm anticipating SoFi to actually head much higher from here. So, you know, I expect SoFi to breach the 30s again very shortly, and that's kind of my position there. Now, if we head back down, that's totally fine. You know, I have plenty of time to be right. Even if I didn't, you know, even if, let's just say SoFi went back down to 25 by expiration, I'm totally cool, you know, owning the shares at 27 because I could sell a covered call above my cost basis, right? 2 points, maybe 4 points above, and still collect you know, almost 2% on those in 15 to 20 days. So really liking SoFi here and really liking the fundamentals as a company. So that's why I doubled down. I made it a bigger position in the portfolio, bringing my cash levels outside of that VIX cash allocation range because of this 6% dip. I just felt like, hey, this is a good opportunity to just kind of double down on the portfolio and, you know, really strengthen the position here. Now, let's dive into the next stock, which is Palantir. Palantir is seeing a significant run today, about 2% up, and I don't think the run is over. I think it's just getting started. When Palantir gets moving, the stock really starts heading up to new all-time highs. So if we take a look at just some of the things that came out, you know, their past earnings, 77% revenue growth, what investors are really rewarding right now is actually free cash flow. We saw that happen with Meta. They spent too much on, you know, investments in lots of different things, and that affected their free cash flow. And boom, the stock got hit. Same thing with HIMS. Same thing with Amazon. Right, free cash flow is being rewarded right now. So if we look at the adjusted free cash flow for Palantir this past quarter, $540 million with a 46% margin. Right. Cash on hand, $6.4 billion. They could pay off their debts, I believe, like 4 to 5 times over, okay? And then lastly, if you look at the fine details of their earnings presentation, it says that basically they only use, in the past 3 to 9 months, okay, they only retired about 0.01 million shares by buying them back. They only used about $19 million to buy back shares. they are approved for about 880 million in authorized share repurchase program. So this 880 million remains for them to buy their own shares back, which helps push stock prices up. So with that being said, not really worried about any dips here on Palantir because they have so much cash that they're able to help their investors out by buying back their shares, right? So that, that's huge. That's one huge reason why I'm still pretty heavy in Palantir. Another reason why I'm heavily investing in Palantir is because of their NVIDIA partnership. Now, this expands real world AI adoption, okay? Supercharges their Palantir's AIP software because they're able to go to companies and say, hey, our software is backed and built on NVIDIA chips, Blackwell GPUs, the fastest and best GPUs out there, right? And accelerating their enterprise growth. So this is kind of the next level for Palantir to really attack the commercial markets, and having that NVIDIA partnership there, I believe will help them with their growth. So, really looking forward to that. If you take a look at the chart, lots of momentum building up here, okay? We aren't even overbought yet. And Palantir, as you know, in previous times, like we could stay overbought for a month on end, right back here, and hugging the upper Bollinger Band for months on end. We are not even close to the upper Bollinger Band here. So I think, for right now, I think we probably reclaim the 190 area pretty soon. And then we head up to 200, potentially in the beginning of New Year's. And then who knows, after that, maybe we shoot up to new all-time highs within the next 3 months. So that's kind of my take on Palantir. This dip was a wonderful opportunity. I knew that this was definitely overblown here. So let's take a look at the portfolio. As you can see, we have about $88,000 or technically $90,000 in this a lot of shares right here, 72K. So about 160K worth of shares. And then we have another 30K in cash secured puts. Okay. So right now, my shares, the 500 right here, are going to get called away. These I had at 177.5, but I sold, actually, no, these 400 shares are gonna get called away. So let's kind of dive into this. I sold these 180 covered calls against my shares at 176.88, okay? So I'm going to get some appreciation, a very small amount, about $4 worth, right? And then I'm gonna collect about almost $1,500 in premium in 21 days. But these shares are gonna be gone. So I'm just gonna rotate that money back into cash secured puts. If in 14 days, because I have these covered calls on these 500 shares, if I get called away at 185, then I got about $7.50 worth of appreciation plus another $1,200. So let's just say I get the whole thing called away. All right, I'm going to enter inputs again, and I'm going to be pretty aggressive. So let's just go out to like January 9th, and I'll probably go 35 delta. So I'll probably go to these 175s, okay? Anywhere between 25 and 35 delta. If it were a normal day, I'd probably do 25 to 30 delta, but because I'm really bullish right now, I'll probably go either the 170s or 175s, okay? So I'm gonna pick up anywhere between 3.3 to 4.3% potential ROI there in 35 days. So really good return for me in my portfolio, and I like that. And I'm fine if the stock goes, let's just say goes back down below 170, I'm gonna be assigned 100 shares per contract. That's totally fine. I'm fine owning it, getting paid to dollar cost average. But let's just say I sold the 170s from all-time highs, okay? That would be about a 18% discount if assigned, okay? From current prices, that would be about a 6% discount. Totally fine with that. And then if we sold the 175s, that would be about a 15% discount from all-time highs. But if we zoom out long-term, I think Palantir could be easily, by, let's just say springtime, by April, first quarter ending, Palantir could probably be in the 220s, maybe even the 230s from here. Just a safer projection on my end. But very bullish on Palantir. That's why I added more. And I'm continuing to add more into the portfolio as, every time this stock dips. So I hope you enjoyed this update. Please give it a thumbs up, and I'll see you in the next one. Take care.